12 out of 14. That's the ratio of IPOs with 100 million in revenue that underperform the S&P 500 when they sell at an expensive 40 times revenue. The SpaceX IPO is sitting at 94 times revenue. You've likely watched any one of these other videos about the crazy valuation of SpaceX, but today we're actually going to do the math to see what SpaceX would need to achieve in order for it to be a rational investment. We're going to run a reverse DCF, which just means we're going to see what the company would need to achieve in order to earn its valuation, based on the performance of the three different businesses. We're going to make sure that you know exactly what you need to expect from the business before buying it at the end, because right now the business is being valued the same as every single NFL team, times 7. So to deserve that valuation, what exactly needs to happen? Because when you're buying stocks, you have to make sure the price is rational, but that there's also room to make money on the investment. And most importantly, that you have room to outperform the S&P into the long term. Because otherwise, what's the point of buying a riskier individual investment? But quickly, let us make sure we understand the companies that you're buying into if you do decide to purchase SpaceX. This will also be important to understand the math that we do at the end of the video to make sure it makes sense. Let us start with the branch that's the newest introduction, XAI. If you're purchasing SpaceX, you become the proud partial owner of Musk's AI operation, which consists of Grok and Twitter, which you likely already know, but it also consists of Colossus and Colossus 2. These two entities are among the biggest data centers in the world, and a large reason for the losses that we experienced in the sector of this business. This is because billions in GPUs have been bought to run these centers, and GPUs only last so long, and we have to recognize that their lifespan is short. Thus, we lose a lot of money continuously buying more and more GPUs. And I think the final part of XAI is the largest, and this is orbital AI compute. There have been ideas for a while to put data centers into space, because the energy cost for cooling would be less, and they would not take up the real estate space on Earth. SpaceX would be the main force that would be able to bring these data centers to space. As we see in their S1 filing, they have the unique right to win in orbital AI. The sun contains 99.8% of solar system's energy and offers what we believe to be a truly scalable solution to terrestrial energy constraints. They believe the logical path forward is to move power-intensive AI workloads into orbit, and they believe that their launch business will allow them to get there before their competitors. The value here really is not measurable, but SpaceX attempts to put a price tag on it of $28.5 trillion. Yeah, I'm not kidding. That is what SpaceX says is the total addressable market for all of their businesses. So I guess it's not that bad. And as we can see, space contributes $370 billion, connectivity, which is going to be Starlink, $1.6 trillion, and the AI, $26.5 trillion. Okay, never mind. This almost feels worse. I mean, SpaceX is pretty much saying that they're not even a space company. They're supposed to be focusing on AI rather than actual space. I feel like most investors are going into this thinking they're buying a space company, when in reality, this suggests that SpaceX should entirely focus on AI. It feels like the entire company is teetering on AI, to be honest. But the value creation of AI recently has been immense, and it's been even more for the companies that are providing the components for AI creation. Companies that are supporting AI infrastructure have been rallying over the past few years and have brought returns equivalent to that of no other industry. There could be real value generation with an AI infrastructure for SpaceX. Whether this figure is actually rational, though, I would say this is just pulled out of thin air. But a point against that is early internet days, when no one knew the impact that it would have today. But also we have to consider this again. This is the total addressable market. So while this is SpaceX estimate for each one of these industries, what the market's going to look like, it doesn't actually suggest what their market position would be. So while 370 billion is space, I do stand to believe that SpaceX should have quite a large share of this, as I do believe they're the leading space company. But for AI, I would beg to differ, to be honest. But anyway, we have to find what the business is returning now. So if we go to AI in the revenue page of SpaceX, we see that AI is yielding 3.2 billion in terms of revenue. This is growth of roughly 23%, which in my opinion is not nearly quick enough to justify the valuation. But we can go further to see their earnings. We see once again 3.2 billion in revenue, but the loss from operations is $6.3 billion. And we can see this is mostly coming from assets with short lifespans. As we see, the segment adjusted EBITDA is negative 1.2 billion, suggesting that we're losing a lot of money on depreciating assets. And unfortunately, we see poor performance from the space sector. We see that revenue is actually decreased year over year, which is definitely not something that you want to be seeing for a company that needs to have immense growth. And we see that in 2025, the space segment generated $4 billion in terms of revenue, and the loss from operations, $650 million. But the segment adjusted EBITDA was $650 million. We see that there's a lot of deductions from the actual development of Starship during this time. So while you can argue that there's segment adjusted profit, I like to use GAAP measures. But at the same time, we have to understand that the SpaceX brand is the best space company in the world. It has a 99% mission success rate for the Falcon 9 and has lowered the cost of launch by 85%, going down to 2.7 thousand per kilogram compared to 18.5 thousand per kilogram, which is the average historical launch cost. But there is a major problem that I have with this business. Musk, for as long as I can remember, wanted to go to Mars. And this seemed to be the mission of SpaceX. But in the last year, Musk has decided to change his trajectory and wants to go to the moon now. While this article suggests that maybe it was Trump who influenced this change of heart, I have a completely different idea. I think it is because Musk knew that he was going to IPO SpaceX, and he needs a closer target for investors. He needs to show real progress and momentum of the overall business. And the problem with publicly traded companies is that they want to see progress really quickly. Musk is a long-term thinker. That's why barely a year ago, the moon was a distraction to Musk, because Musk has to achieve value for SpaceX in the next 10 years. Mars would take over 20 years. The problem with this is that a company that is supposed to be rationalizing this valuation should be emphasizing their mission and not straying from it. Just seeing this makes me worry for the overall business, because SpaceX is supposed to be a play for 10 years out. And if Musk feels pressure to make returns very quickly, then he might not be able to bring the value that SpaceX needs to in order to outperform the index. But these are just some of my own ideas. So let's move on to the last business, Starlink. Starlink has generated an astounding $11.3 billion in revenue. And even more impressive is the margin that they're able to have on this business. Income from operations is $4.4 billion. This suggests an around 39% margin. But the problem that I see is that Starlink really has just been funding all of these other business practices. It's just been generating cash for these other two businesses to burn. To believe in SpaceX, you have to believe that these two segments are going to be able to bring value and that they're going to be able to bring value really soon. But we do see that the value Starlink is bringing is real. Look, 5 million in Starlink subscribers last year during this time compared to 10.3 million. They've doubled the Starlink subscribers. So it does appear that Starlink is going to be able to continue bringing cash to the business for space and AI. Not to mention that the cash being raised during the IPO should also be able to help this. But finally, since we have figured out all the segments now, let's jump right into the reverse DCF so we can do the math to see exactly what the company should be returning for you to make the investment. Now, here we are with the model to suggest what we need to be seeing from SpaceX to actually see it be a reasonably valued company. Now, first off, there's a bunch of things that I just had to assume and kind of make strong guesses on, such as the terminal operating margin, whether it's possible 20% is actually the terminal operating margin. I have no clue, but we do see that Starlink is around 39%, which has been achieved. AI, if we're able to fix losses, I'm going to be estimating around a 20% margin, and launch is a very capital intensive business. I'm going to be putting it at 10%. Obviously, these are all estimates. But if you assume these estimates are somewhat correct, we are looking at an insane needed growth pace of 37.7% in revenue CAGR. And this is for the first 10 years of the company, because I believe that the first 10 years are going to have larger growth than the years 11 through 20. But we would need to have year-over-year growth of 37% for 10 years straight, and then have growth of 20.7% for the next 10 years. Now, I understand that there's a lot of numbers on this page, but what all of this is saying is pretty much SpaceX is going to have to grow revenue like almost no other company in history. We can see the revenue growth rate of some of the most regarded companies in the world, and while we see that Google and Amazon have been able to return ridiculous amounts in growth of revenue, this is pretty much unheard of. And I honestly feel kind of silly showing this year 20 after-tax profits, but this is what is implied when you're giving a valuation of 1.7 trillion and you're making no money and you're actually losing money. Now, this is the reason why I just cannot invest in the company, and I believe that you should stay far away from an investment in the business. But if for some reason you do believe that this is feasible, then I won't be one to stop you. It is also important to notice that this is in 20 years, so the value of $1 is going to be much, much less. You may have taken a look at the DCF and decided that this company just does not justify investment, but unfortunately, if you are allocated to tech-heavy funds, then you are going to be forced to buy the security, as SpaceX is going to be phased into the NASDAQ in just 15 days after it IPOs. And because it's likely to be one of the top 10 companies in the world in terms of market cap, it's going to be phased in very quickly. But frankly, Musk has been able to complete things that are beyond what people have imagined in the past. So while I am skeptical, everyone was skeptical about Tesla and SpaceX before the rocket launches. Clearly not everyone thinks this is a horrible IPO, otherwise SpaceX would have never decided to go public. During the offering, SpaceX will be raising $75 billion. So maybe, with this money, the company will be able to make something happen. While I feel buying SpaceX does not make sense with the current valuation, and given the idea that you should be looking for outperformance on your capital if you're making an individual investment, I understand the appeal to buy into this dream, and if you buy, just know that the dream you're going to be having is one that's going to take many, many years, and it's not something that's just going to happen tomorrow.